Today, we're really zeroing in on something every business owner deals with, but it gets particularly interesting in the short-term rental world, managing your money well.
Mm-hmm.
We've been digging into this article that looks closely at RelayFi banking, specifically how it's presented as like a tool really built for STR operators, helping them manage finances smarter, chase better profits.
Yeah.
So our mission here is just to pull out the key stuff, the main insights from that source for you.
Exactly. And what's interesting about this source is how it frames the banking platform. It's not just, a place your money sits.
Right.
It's positioned as something that actively helps you apply financial strategies, like profit first is the big one mentioned, right inside the daily operations of the business.
Turning principles into actions, basically.
Yeah, automated actions. That's the idea.
Okay. So looking at the source, we're going to unpack how RelayFi is described across, a few key areas they highlight. How it supposedly gives you control with sub-accounts, how it helps avoid those kind of sneaky fees, how it syncs up with the other tools you're probably already using.
And integrations,
and automating financial routines, supporting growth as you scale, making payments faster, and just keeping the books cleaner for your accountant.
So think of it as us following the money's journey, but specifically through the lens of how the article presents this tool for someone in the STR space.
Got it. Okay, let's dive in. The source really starts with a common pain point, right? That feeling.
Oh, yeah.
Looking at that one big number in your account and just thinking, where did it all actually go?
It happens all the time.
And it frames RelayFi's sub-account structure as the sort of direct answer to that lack of visibility.
And the number they mention is pretty striking, up to 20 sub-accounts per business under one login.
Wow, 20.
Yeah, and the source directly ties this to methods like profit first. It lists out examples, income, profit, owner's pay, tax, OPEX.
OPEX, operating expenses.
Right. And even specific ones like repairs and reserves or, say, marketing, dedicated accounts.
Okay, 20 is, it sounds like overkill maybe. But I guess for you, the listener, running an SPR, you've got money coming in from Airbnb, Vrbo, maybe direct bookings.
Different platforms, different payout schedules.
Exactly.
Yeah.
Plus, setting aside for taxes, your own pay, cleaning crews, maybe saving for maintenance across multiple properties.
Yeah.
How does the source say this level of separation actually changes things compared to just, one main account?
Well, it argues that breaking it down like this, right at the bank level, forces you to be proactive. You allocate the money as soon as it hits.
Oh, okay.
But the article suggests it stops you from dipping into funds meant for taxes or that future roof repair because, boom, it's immediately moved to its own little bucket.
And this is where it gets really interesting, isn't it?
Yeah.
The source highlights you can set up automatic transfers between these accounts based on percentages.
Yes, like the profit first percentages.
Yeah.
You set the rules once, it claims, and RelayFi just does it automatically. The article says this gets rid of the need for manual transfers every week or messing with complex spreadsheets. It basically aims to turn your income processing into a kind of smart machine.
A smart machine that saves for the important stuff right off the bat.
Yeah, removing the guesswork, building in that discipline automatically. That's how it's presented.
Okay, moving on from structure, fees. That's another big selling point the article really leans into. It contrasts RelayFi with, and I'm quoting here, traditional banks that love to charge you for everything.
Right, and it gets pretty specific. No monthly fees listed, no minimum balance requirements, no overdraft charges, free unlimited ACH transfers.
That's quite a list.
It is. And this focus on ditching common fees is presented as banking that respects your hustle. The implication being less of your hard-earned revenue gets, chipped away by bank charges you could avoid.
Which, let's be honest, those can add up. Especially with frequent payouts, lots of little operating expenses hitting the account all the time. Now, okay, as an STR operator, you're probably juggling other software too, right?
Mm-hmm.
Property management stuff, accounting platforms. Does the article say this system, RelayFi, plays well with others?
Oh, absolutely. That's a key part of the pitch, it seems, connecting it to your whole tech setup.
Right.
The source talks about seamless integration, both with accounting software QuickBooks. Xero are mentioned for syncing transactions, making reconciliation easier.
Standard stuff, maybe?
Yeah, but also, and this is crucial for STRs, integration with property management systems. It names Hospitable, OwnerRez, STESA specifically.
So connecting directly to the tools managing the bookings and operations.
Exactly. It's described as being the financial brain that keeps all these systems talking to each other, the goal. Leaving your books, as they put it, squeaky clean.
Squeaky clean. I like that. So, okay, knowing your tools can talk to the bank is great, but what does that actually let you do? Does the article get into how this setup helps automate those, frankly, tedious financial steps?
It does. So beyond those automatic profit first splits we talked about, the source says you can set up other recurring transfers. Maybe weekly, maybe biweekly. You could time them with your payouts from Airbnb or Vrbo, for instance.
Okay, so automating the splits, automating other regular transfers. What else?
Well, it mentions creating templates for common money movements between your accounts. Save some clicks there.
Right.
And another point is tailored access. You can apparently give specific permissions to team members, like let your bookkeeper or CPA see things without giving them full control to move money around.
Okay, so that adds another layer of automation, or at least delegation. They get what they need without you having to pull reports constantly.
Yeah, removes you as the bottleneck for every single question. That's the idea presented.
Makes sense. Okay, what about growth? For STR businesses looking to add properties, maybe under different LLCs, does the source position RelayFi as something that grows with you?
Yeah, that's definitely highlighted as a benefit for scaling.
How so?
The article points to features like being able to easily open separate accounts for each new property or, each distinct LLC you set up. Yeah.
And it also talks about assigning debit cards, virtual or physical, to specific vendors, like, say, your cleaning company or your go-to handyman.
Okay.
And you can tie that card spending directly to a specific properties account or even a specific spending category like repairs.
Wait, so you could actually see right in your bank account, okay, I spent X amount on cleaning for property A this month and Y amount for property B.
That's exactly how the article describes it. It argues this gives you super granular visibility into your cash flow, broken down however you need it by location, property type, even by vendor.
Which presumably helps you make better decisions.
That's the argument. Better data-driven decisions about where to maybe expand next or which properties are actually your most profitable, financially speaking.
Got it. Now, payments. Fast payments are crucial in this business, right?
Yeah.
Paying cleaners, contractors, suppliers quickly. Does the article cover moving money out easily too? It does. The source lists the usual suspects: ACH, wires, mailed checks, mobile check deposit. It also emphasizes that multi-user access, again, so your team can help manage payments efficiently.
Okay.
And they give a relatable example. Setting up one of those tracked cards for your cleaner tied straight to a repairs and maintenance or maybe an operating expenses account.
Instead of using your personal card or Venmo for business stuff.
Exactly. Avoids mixing funds, keeps the tracking clean, all within the business banking system.
Right. And finally, the big one. The one that probably causes the most headaches for STR operators. Tax time. Dealing with accountants. The source claims this system makes that whole process way smoother.
Well, the logic presented is because the money is separated and automated right from the start.
Into those clear buckets like tax, OPEX.
Yeah, exactly. Because it's allocated into clear categories, the article states your financial records are just always up to date, always organized inherently.
Which leads to?
CPA ready books, right out of the gate. That's the term they use.
And why is CPA ready such a big deal, according to the article?
It suggests less stress, fewer potential errors when filing taxes, obviously, but also it implies it could actually lower your accounting bills.
How?
Because your CPA isn't billing you for hours spent untangling messy bank statements or figuring out what transactions were for. The data's already clean, already structured.
So the organization itself becomes a potential cost saver.
That's how the article frames it, yeah.
Okay, so let's try to wrap up this deep dive into what the source material is telling us. RelayFi, as presented here, is positioned as way more than just a standard business bank account.
Definitely. It's presented as this integrated system, built specifically, it seems, to help money flow better in an STR business and give you much more detailed control.
And a huge part of that control, according to the source, comes from features like those sub-accounts, up to 20 per business, remember, under one login.
Which the article strongly links to implementing financial methods systematically, like profit first.
Right. And automation is clearly a core theme running through it. Setting up automatic transfers based on those percentages or weekly schedules, and syncing with your other tools.
Yeah, the QuickBooks, Xero, Hospitable, OwnerRez, Stessa integrations are key parts of that automated ecosystem described in the article.
The source also spent a lot of time on the fee structure, didn't it? Highlighting no monthly fees, no minimums, no overdraft, free ACH.
And positioning it as supporting growth, especially with those features for handling multiple properties, different LLCs, and tracking spending with dedicated cards per property or vendor.
So what, of all this, as the article presents it, what's the big takeaway?
So what here, according to the source, is really about transforming financial management, taking it from something that can feel like a manual, often overwhelming chore.
Yeah, I think many can relate to that.
Into an automated, structured process. The goal described is consistent, clear visibility, knowing where the money's going, and ensuring funds get allocated correctly, automatically. Ideally, this leads to better decisions and makes things like tax prep way easier because the data is clean, CPA ready.
Moving from chaos to control.
Pretty much. A shift from financial chaos to predictable control, which resonates particularly if you're trying to use something like profit first.
So thinking about the listener, why does this matter to you? Well, if you're in the STR game, or frankly any business with varied income and lots of expense types, that challenge is real, isn't it? Getting a clear financial picture, making sure you're actually saving for taxes, for your own pay, for future repairs.
It's a constant juggle.
Exactly. And tools like the one described in this article are presented as a potential path towards building a more solid, scalable, and maybe less stressful financial foundation. The promise is saving you time on manually moving money around and maybe even cutting down accounting costs because your data is just clean from the start.
Building structure proactively and not just reacting when things get messy.
Right. Okay, so the source we looked at really emphasizes using these automated systems, these predefined rules like setting profit-first percentages to manage money automatically. Based purely on what this article suggests, here's a final thought for you to chew on. Does relying so heavily on automation and these kinds of set-it-and-forget-it allocations truly lead to more effective financial control and profitability in the long run? Or perhaps could it risk reducing the business owner's, own hands-on feel for the real-time nuances and fluctuations of your cash flow? Something to consider. Speaking of solutions, Walter is actually offering to help you, the listener, get a handle on this financial piece, specifically with RelayFi.
Oh, extending that help offer again.
Yeah, he's offering a free 45-minute Zoom call. He'll literally show you exactly how he's set up and uses RelayFi.
That's generous. He mentions it took him, 45 hours to figure out his whole system?
Right. He says he can save you all that trial and error, walk you through it in just 45 minutes.
And you get the recording afterwards, too.
Yep. He sends you the recording of the call. Super useful to refer back to.
Okay, so how do people take him up on that?
Same contact info as before. Text him at 601-813-4661 or shoot him an email at walterwofford@gmail.com. Critically, make sure the subject line is just help.
Got it. Text or email, subject help.
Walter's story really hammers home how valuable it is to learn from those failures, but also how finding tools to automate things, especially finances, can just massively cut down on stress.
Yeah, freeing up mental energy.
It really makes you think, doesn't it? What are the biggest friction points or time sucks in your own business or even personal finances? And how could maybe identifying and automating those free you up to focus on growth? Or maybe even help you skip some of those painful early mistakes Walter went through?
That's a great question to ponder. Where can automation remove the stress and let you focus on what really matters?